Welcome. We are back. Another day in the market. Usually don't stream on Mondays, but it was an interesting day today. I wanted to talk about it. Just a quick little update. Before we head into tomorrow, I will be live trading in the premium Discord Tuesday, Wednesday, and Thursday. This is the last week of the sale, so it's the pin chat if you're interested in joining that. I had like a bunch of new members join last week. It was great. Got a few new lifetime members too, so it just goes to show that people are willing to stick around, and I really do appreciate that. So I'm excited to talk about what's going on. We're going to do a quick start with Bitcoin. It's got some hidden bearish divergence developing. Also, kind of the second time it's rejecting the 200-day moving average in a row. I wouldn't call it a head and shoulders, but it's looking like a double top momentum shifting structure. If this breaks under 25K, probably heads back down to the lower $20,000 area. I mean, I guess you could look at this as a bear flag that already broke down, and now it's just potentially going to start playing out. And then Ethereum, I don't know, it looks a little bit different because you have like maybe a wedge look here, but you're still making lower highs and lower lows. And if this were to be a harmonic forming, it should go to below this low over here from March, because it's a 618 on the B point, any harmonic with that. I mean, unless it were to be potentially a Gartley, it's the B to D, I think might be a little bit too small for that, but yeah, that wave structure might take it even lower. And then again, you could zoom out here and then draw out potential bear flag. So Bitcoin not looking great. Let's shift over into bonds, which are the hot topic in finance right now. US 10-year going even higher, sitting at over 4.5%. It's absolutely insane what we're seeing in bonds right now. Over the weekend, I sent out the premium watch list, and SHY, the 1 to 3 year Treasury bond ETF, it's now bounced at $80 3 times in a row. Maybe tries to break that supply line. We will see. Quick look at some other stuff. You got the VIX. It's a little bit hard to see it, but this is really since March. This is only the second time that the VIX is testing the 200-day moving average. You did get a shooting star candle today, so I know this white line might make a little bit confusing, but this candle right over here technically is kind of like a shooting star, but I don't know. You've bottomed at 13 twice now. You spent months holding that level. If you break above 19 on the VIX, that's when the market might get a little bit weird. Quick update on XLE. Still has that potential ascending triangle. So right now what it's trying to do is flip these highs from August into a support over the past 3 days. So that's your energy sector in the market. We have XLI, which is currently dropping back down into this zone, which has been support before, but also just kind of a choppy range, and also testing the 200-day moving average. So it's interesting, because if this breaks back by the 200-day moving average, you're flipping previous resistance into a support. You have an oversold RSI. Also, the classic bullish divergence on the MACD is possible. When you start to look at individual sectors, they still have a chance, but I don't know. Every time, if you've been watching the streams, you know this. Every time I go live, I have to sneeze. I haven't sneezed all day. Go live right now and I have to sneeze. I don't know. Maybe I should look for dust around my desk or something, but yeah. XLF just testing the 200-day moving average. That's your financials. Gold rejected the initial breakout of this falling wedge and the 200-day moving average. Chinese index, Hang Seng index, retesting lows at 17.5K. Just below you have a gap fill at 17.3K roughly. And then finally the dollar currency index, it broke above this level, okay? Keep an eye on the US 10-year ripping right now. Look at the VIX, double bottoming at 13, starting to shoot up. Look at the dollar currency index, breaking above that 105 resistance level. It hasn't been above this level since last year. First time in 2023 that you're at these prices on the dollar currency index. We're getting movements in the markets that we have not seen throughout the bull market of 2023. We're starting to see a shift. Now, could it just be the September seasonality? We're going to have to see in October, but you are seeing a shift. Talking about stocks, let's head over into what's going on in the overall markets now. Quick roll call. If you're in the chat, say what's up, hit the like button, hit the subscribe button. I'm about to give my thoughts on how the S&P 500 is looking right now. What's up, Lintigan? What's up, Daniel? What's up, AK? What's up, Corey? A says, if I sign up for a month is it for 30 days from purchase or until the 30th? It's for 30 days from purchase. So you will get from the if you were to sign up tonight, you would get from the 25th of this month until the 25th of the next month. So if you do want 35% off that first month, you can use code CHAMPISBACK. When you go to the checkout, click on add coupon and then put CHAMPISBACK for 35% off that subscription. All right. So the S&P 500, what's going on here? We had this triangle pattern. As I kind of was feeling, it did break down, and the breakdown played out very quickly. What we are now sitting at is the true test of probably the rest of the year. Okay, what happens at this level? You broke above this level in June. Okay, prior to that, you topped out at this level in August of last year and in April of last year. You broke above this level in June, right? Then you came back down to the level. It became a support in June. You came back down to this level again in August. It was still your support. So June, it was your support. August was your support. September, we're now testing this level once again, okay? Yes, on this move down, it was the lowest you got. You broke under this low from June. You broke under this low from August. But today, 0.5% green day for the market. Bulls attempted to fight back, to regain just a little bit. Pretty much you got a bullish engulfing candle. You didn't technically close above Friday's open, but you engulfed most of the selling from Friday. Now, this is a very clear area. I'm going to take all of these lines off my chart for a second, and we're just going to look at this. This is the big test here, okay? This is the big test. If you cannot reclaim above 434 on the SPY, pretty much breaking above Friday's high, then this can simply just be looked at as a dead cat bounce, a quick rally to just reclaim a little bit of a selling before more downside. Now, let's say we continue to sell off. I want to talk about this. You can look this up on Google. And typically, and not typically, most of the time, you pretty much want a 386. From this X point to the B point, you want to retrace 0.386. That's a Fibonacci level. If you want to learn about what I just put on the chart, which is harmonics based off of Fibonacci, both of those are explained in my free course in the description. And there is a potential move in this bullish bat, even though it's not bullish until you get to over here, in which once you break under the B point, you can see a sell-off to get to the final point, which, yes, that would be bullish. But what sets up the move to that bullish point is a BAM, B-A-M-M, Bat Action Magnet move. Shout out to Scott Carney, shout out to Mitch Ray, learned it from them, okay? It's a decent probability short setup, actually, in which you play the point in which you break the B point down to the end of the pattern, and then you could maybe flip long if there's good variables at the pattern completion zone. So the point in which we can tell whether or not that's going to happen is whether or not we reject this. Now, of course, just because you start selling off lower than this doesn't mean you're going to go all the way down there. You still have a very good level at 419 on the SPY, which is not only a 200-day moving average, but also all of these highs from spring, and then even some highs from last summer. So 419 is a very strong level on the SPY. That's definitely first if we do confirm the breakdown of this zone. All right, so this is the big test. If you start to bounce here and get back above that level, you're safe for right now. You can have some classic bullish divergence on the MACD play out, and we'll take it from there. But I did want to talk about that. All right, so let's start everything else back on the chart. Let's go over to the weekly time frame right now for a second on the SPY. You can delete this pattern. Delete that. Glen to Glen doesn't an engulfing need to take the entire wick? In my book, it does not. It needs to engulf the previous body of the prior candle. All right, if we're going to be zooming out here, I just talked about that bullish bat, right? Now, my good friend, Seek for Bleak, he's in the streams quite a bit. He's one of the mods in the Discord. We were talking about how over a year ago on the streams, we were looking at the potential of this move. And at that point, when we were talking about it, we had done this. Okay. And we were like, what if we start to rally in 2023, make a lower high, and then see a major downside move to finish a bullish bat? It would be an 886 retrace. You would retrace 80% of what we've rallied since the COVID crash. This is a very hypothetical situation. But what starts to set it up is a reversal lower than all-time highs. And that's currently what we're seeing. If you don't hold this 430 level I was just talking about on the daily time frame, maybe it can start to add some probability to the equation. I don't even want to really consider this until we break again the B point, which would pretty much mean falling down to here. But if we're just going to be very, very early and just for fun looking at this chart, there's something to talk about. All right, and the main reason why I'm still kind of looking at this is because you pretty much made a perfect 50% retrace from COVID crash lows to all-time highs during 2022. You went halfway back down. That's kind of the main reason I'm still looking at that. All right, that's a longer term view. To go into a little bit more of a shorter term view, here are my big levels on the 4-hour chart. You're still just about holding this level, okay? You had lows here in 2021, highs here in 2022, a couple lows here we already talked about in June or August of this year. It's not completely over. Even if you want to just simply take all the lines away and you just want to look at this as a potential double top, that's a lower high. It's not an actual double top until you break the neckline of it. I feel like I just drew like a face, like these are the eyes and that's the mouth, regardless. That's really what I want to talk about on the SPY today. If the VIX breaks above 20, this probably breaks under today's low, okay? Now moving over to more tech, QQQ, pretty similar story here. You got hidden bearish divergence on this one. You're still okay for right now. You're just above holding lows from June and August. Today's rally was like, it was an attempt. It was an attempt from the bulls. That's all it is for right now. And to be fair, like you just did see, let's see how much. In just about 2 weeks, you just saw a 6% decline in the QQQ. So it was an attempt, still above the bigger levels here. But again, this is a harmonic that's playing out. This is a bearish shark. You hit the type 1, you hit the type 2, which was a lower high. This is even more confirmation. That second high being lower than the first one is even more confirmation of that harmonic. So, it begs the question, even if we do start to rally off this, we go up to fill these gaps from the gap down last Thursday. We could just make another lower high and then in 2 weeks break this level. So when I go down to lower time frames, I might have a little bit of more of a bullish stance on the market, but that doesn't mean that we start getting back these levels and we're just going to rip all the way to all-time highs. You have a lot of chop just above you. Just above you, you have a bunch of chop. So even an attempted rally here does not mean that we're safe from further correction overall in the markets. I don't think we have enough fear in the equation to go straight down in any sort of decline. I don't think we're going to just see a market where we're going down 3% every single day on the Qs for 2 weeks straight. You'd probably need a lot more headlines for that to occur. So even if we do start to change courses in the market, there will probably be bounces along the way, which is going to make it a lot tougher for the people who are very bearish to just stay short the whole time, even assuming we continue to go lower. All right, now to talk about lower time frames heading into tomorrow. Delete this. First off, we're going to take a look at this structure over here. We did get a little bit deep today, but potential for a bullish bat here. Okay, on the 1 hour chart for the QQQ, you've got the potential for it. You got this gap fill sitting up here at 364. There is potential for the bullish bat on the Qs 1 hour if we go over to the SPY. You also have potential for a bullish bat, but this is called an alternate bat. For anybody who's new to stream, I swear I'm not making all this up. You can Google every single term I'm talking about. All right. This, you might be a little bit extended. Typically you want a 1.13 on the alternate bat, but you only went under that level for like 2 candles on the 1 hour chart. It was only 2 hours of this whole sell-off in the last 2 weeks where you were under that point. So I would still consider the potential. And these harmonics that are bullish on the 1 hour are forming at those daily support levels I talked about. So there is some validity here to a bounce, maybe to fill these gaps before continuing lower. I don't know. But right now, my overall stance on the market is still bearish. There's still bearish variables on higher time frames, but my short-term stance, as in tomorrow morning, maybe tomorrow's Tuesday, maybe Wednesday, you're getting bullish harmonics at supports on the daily. There is some room here for a continuation of this bounce. I don't know whether or not that means this is the end of a pullback in the market, but there are some lower time frame variables to see some bounces after a pretty rough week last week. And today might have been the start of that. Okay, I like how in the final candle of the day you took out these highs from the afternoon. That was pretty decent. If we go to even lower time frames, I shared these in the Discord, but the SPY actually broke out on the last 15-minute candle of the day. The QQQ also, probably just going to redraw this, had this down sloping channel and broke out of that. So, you know, if you get above, let's say 362 on the SPY, you've got a gap fill at 364.5. Sorry, that was the QQQ. And then on the SPY, you got a gap fill right around 438. So there's some potential here. To take a quick look at small caps now. You did break down from the head and shoulders in the 200-day moving average. Shout out to Gold Miner and the Discord. This was a great call by him. He was talking about it right up over here. And you saw a 6% decline pretty quickly. You pretty much went right down to this gap fill from June 2nd, filled it, and then bounced a little bit today. So that's pretty much played out for the most part. And now you're just kind of towards the bottom of this triangle. Finally, the ARK ETF, it did break down, and it just looks like an upsloping channel on the daily. But if we go over to the weekly time frame, delete this for a second. Look at this. Once again, 1, 2, 3, 4, 5 times now, apart from this crazy move post-COVID, you have not been able to break above 50 on the ARK ETF and hold it. And what's developed now is this bear flag. On the weekly, this is such a beautiful bear flag for the ARK ETF. And I like a lot of stocks in the ARK ETF personally, long term, but this is not bullish price action right now. You had an attempted rally, you rejected a historical resistance yet again, then you formed a bear flag, then you just broke down from it last week. So I think at the least, unless this really is the bottom on the daily for the SPY and it somehow holds its support and doesn't give it up in the next few months, eventually this should at least mean a retest of these lows at 34. But really the ARK ETF in its whole existence is just a range between like 34 and 50 for the most part. And the reason I'm saying that and not including this is because this was a post-COVID crash stimulus market. It was the perfect environment for growth stocks because of the low interest rates we had and for the amount of new SPAC and IPOs that we were seeing right after COVID. So that was a large role to that. And of course, you add in retail traders really being aggressive in the market into that equation. But apart from that crazy rally that was amazing, but went all the way back down, this is really a range-bound stock, 34 to 50-ish. So that's my thoughts on the overall market. Those are my updates. Just a quick look at some names. NVIDIA, potentially backtesting. No, it is backtesting the breakdown of this ascending broadening wedge. Getting back under 420 would not be good. Apple, maybe in this little bearish pennant here, but still holding on to it. Hasn't broken down under 173 would be a breakdown for Apple. AMC saw a nice rally today, but really it's just going sideways around $8. At least it's consolidating. This is the most AMC has consolidated in a very long time. Tesla, hammer candle today. There's really not much apart from that to talk about. Meta's interesting because it's made a lower high, broke down from the bear flag, but it really hasn't seen a sell-off. So time to rechart is what that means. And this is probably the way that I would do it. I would look at Meta as a triangle on the daily. So just wait to see which way that breaks out. Google, bullish engulfing candle today. Larger picture is bearish, but short term, you have the potential for hidden bullish divergence. You've got a gap to fill above, maybe some more retesting before an eventual sell-off. Fisker, unfortunately, not doing well at all, but this is why trades have stop losses. The stop loss was 625. I also stopped out right around over there when it hit it. It's down another 15% in just 3 days since hitting the stop loss. So, didn't work out, but only a 10% loss compared to what could have been like a 25. Let's see. Without a stop right now, it would have been down, 24%. But that's a past trade. It is what it is. At this point, honestly, if the market didn't pull back, who knows what would have happened. Maybe it would have broken out. But at this point, it's just really just levels. It's just going sideways since April. All right. AI, I'm hearing a lot of people talk about it. I'm not a fan of how it broke the 200-day moving average. I talked about this on our weekly call and premium on Sunday. If it does drop another 15% down to 20.5, then you have a bullish bat at support. Look at all that support you saw at 20.5 back in February. It would line up with the PCC of a bullish bat. That would be interesting. Okay. Some of the swings that didn't get stopped out last week, VTNR, back testing the breakout of this wedge. VLO, already back tested the breakout of the inverse head and shoulders and actually bounced a bit, outperforming the market in the past week. And then N phase has just been going sideways, which I guess is also outperforming the market since the market went down. So some of these energy names are holding up. I mean, it's pretty interesting. Like the three energy names, Vertex Energy, Valero Energy, and then N phase Energy are the three swings that are still active and didn't get stopped out from the selling last week. Interesting. All right, some more large caps, Amazon. 3-day consolidation here. If we go on to the 15-minute time frame on Amazon, keep an eye on this, especially tomorrow. If it starts to get above like 132 tomorrow, you got a gap to fill. I don't know what's going to happen on the same day, but you've got a gap to fill 3 points higher at 135. Okay. Netflix also is at an interesting level. It's trying to flip this high from February into a support. So you have small levels appearing on stocks that could act and could help out the overall markets. Even Microsoft retesting its lows from August could help out the overall market, get a little bit of a bounce here going into the middle of the week. But until the larger picture flips back to bullish, I'm still, bearish until it's not bearish on the daily time frame. But talking about lower time frames and tomorrow and Wednesday, yes, we are near some supports. A beautiful dead cat bounce would basically mean that we would maybe bounce a little bit more tomorrow morning and then completely destroy all the supports and have another down 3% day or something on the Qs. But that's what a bear can dream, right? I'm not saying I guess I am bearish. Okay, maybe I am a bear right now in the market, but that's looking into the next few weeks. The short-term picture for today and maybe the day after is, yes, you could bounce, you're at support, and I might trade that with calls. But overall, I still think some of these supports will break. You've seen amazing rallies on some of these large cap stocks, and even though the pullback feels a lot, it's really not that much of a decline in the market. If we really zoom out over here, from our lows last year, we've only retraced about 25% of the way back down. So even just hit the 382, which even more confluence at this 419 level. It's a 382 Fibonacci retrace level, the 200-day moving average, and these previous highs from March, and then even some lows. It's highs from March of this year and then lows from March of last year. That 419 area, I would be very surprised if we did bounce at it, when we get down to that level. So that's what we're working with here. That's the update for today. I'll be live trading in the morning. If you want to join that, it's the pinned chat. The recording will be posted after I'm done live trading on this YouTube channel, and then I'll be live again, I think, tomorrow night, but I'll keep you updated on that. So hit the like button, hit the subscribe button. Thank you for watching the stream. Have a great night, and I'll see you tomorrow.